how many banks have we got access to as brokers? I'm going to say 30,
Okay.
right, as a round number. Off the back of that, I'd probably say that at least half give brokers access to what we call upfront valuations. Okay, so that's like a gateway. It's like an online system that I put in your address, the property address, and then it will determine if it's going to trigger what we call a full valuation or if it's going to take what they call a desktop valuation. So understanding valuations. So there's 3 valuations: desktop, computer-based,
online,
yep. Curbside, which is where the valuer drives past the property but doesn't actually ever go in. Pretty much just to show the bank that yes, the property exists.
Okay.
Tick. And then they call a full valuation, where they actually go through the property, produce a full 3, 4, 5 page report, and take photos of the property as well. Okay.
And if I can just say something
Go for it.
to, if there's anyone out there that's sort of not keeping up with this train of thought that we're going through, is that the valuations that you can get done, that where a bank comes back to you and says, this $1 million property is actually worth $1.2 million. All of a sudden you've got $200,000 equity, usable equity.
You got 200,000 total equity.
Total equity.
And then we go up to 80% against the 1.2.
Depending on where your LVR is.
What the existing loan
so
balance
to say.
is. Yeah, spot
exactly.
on. Really spot on.
But you've got that additional, just from them giving a new figure or a new market price of that property, which is kind of wild. It can happen pretty quickly as well.
Very much.
Yeah.
Yeah, very much. So, and it's unique because we're in a property market where it's accelerating so quick. So I could do valuations 6 months ago to now, and we're going to see a huge uplift in property prices, right? So it's almost like you couldn't save that quickly enough that your property's gone up in value. They've got equity to pull out of it, which is wonderful. Right? It's an investor's best friend, equity. So I think we're really, I think the point that you and I are trying to hit home is valuations are subjective.
Very much
right?
so.
So you take a bank. Well, I had a good example. We did a property up in Brisbane just recently, freestanding home, probably about 3 k's out of Brisbane, and the owner insisted that it was probably worth about 650. Okay. So what we could do in the valuation system is we could put the valuation for about maybe 685.
Okay.
Right.
When you order the valuation.
Yeah, when we order the val.
Yeah.
Okay. Off the back of that, we know that number because we've run a property report, so a bank estimate, and then we see what the range is. So the banks, when you see those like CoreLogic RP data reports, they've got a range and say the midpoint is here.
Not always accurate.
Not accurate, especially in the current, in a fast-paced market.
Sure.
And then we know that there's the midpoint, and then there's like what we call like a standard deviation. So again, there's like a little range that you can go to above it. And so if I was to say that property is worth 750, it'd just rebound all the way back to its kind of midpoint. Yep. But if I can kind of go nudge up, and get it to like just shy, maybe
just
690.
enough so it doesn't ricochet back,
right?
Kind of thing.
Yep.
Yeah.
So it becomes like a little game sometimes for us to go look.
It's a game to me.
How much can we push that valuation up within reason to go? Okay, yep, there's comparable sales to support it, and then if it's a computer-based valuation that we're after, the desktop value is what we're calling it. We know that we've got that confidence that we go, okay, yep, 685 is a good number, and then we can lend against that 685. Now, the challenge is when you get to 685 and they say we want a full val, right? So full valuation, meaning a valuer goes out there. We risk that maybe the value doesn't see it at 685 and they come back in at 650.
Which will trump any desktop or curbside val.
So the highest, so the desktop will be overridden by a curbside. The curbside will be overridden by a full valuation.
Right.
Yeah. So it's understanding, and then we can cancel a full val as well.
Yeah.
Right. We can cancel a full valuation. It probably just means that we strike that lender out.
Yes.
So again, what we're trying to say here is it's not about the interest rate.
Yeah.
Don't worry about the interest rate. If you're getting $80,000 on a better valuation, that's far more powerful than 0.05% on an interest rate.
I'm a big believer.
There we go.
Completely. I mean, but after all these years, I will push and push and push for a higher valuation on these properties,